first video. I don't have a trader name yet or anything like that. This is not financial advice. I'm just testing this to see how it's going to work for me. My purpose and goal is to share the information that I've learned on my own to help other people learn how to trade and to help them make decisions for themselves and to understand how the market moves, why it moves, and what you can do to capitalize on that. So let's get started. I'm going to start here on Saturday, November 25th, 5:39 p.m. And we're going to start with the S&P 500 ETF SPY. And I like to use the Webull app solely for charting because it's a simple app, it's easy to use, and it's easy to see what's happening on the chart. So I'm going to start off by just removing this here at the bottom so we can just have as much of the chart in plain view as possible. So my trading strategy, it's fairly simple. It's basically has to do with supply and demand and the volume spread analysis. So we're going to start here on the 5-minute chart, and we're going to take a look at the start of the day. And as you can see, we just have our simple volume at the bottom of the chart and our candlesticks above it. I don't like to use indicators, Bollinger, EMA, and these kind of things, just because I find them a little bit too distracting, and I think that a lot of them are useless. Sometimes they can be useful, but in general, I don't like to use them. So let's get started and try to see what happened throughout the day here by analyzing the volume, or try to just dissect any single move here on the chart. So if we look at the chart in general and we pull out a little bit, it looks like we did have some sort of support here for the day. And I'm just going to make a line there across the support. So we had some support here for the day. Generally, at the start of every trading day, I don't like to take any trades at the start of the day because there's such a massive imbalance usually on the first candle of the day that I feel that it's just there and it's meant to just trap a lot of traders. So I don't like to trade off of this opening. I like to wait for something to develop. So if I was going to be trading this, I'd be looking a little bit further out in the day. This is also a very difficult day to try and analyze, but it's the day that I chose, so we're going to go with this. Now, as you know, we have 4 types of market participants. We have aggressive buyers, aggressive sellers, passive sellers, and passive buyers. And buyers and sellers appear on both sides of the candle depending on the type of buyers and sellers that are executing their transactions. So as we have an open here, we have a pretty large amount of volume. So there are some sellers in this range, and there are also buyers, which is why we have this move downwards here immediately following this candle. So as the stock moves sideways, and we start to see that there is some support here, and there seems to be some resistance at this higher level, what we're going to be looking for is to see if we actually have some decent support at this level to execute a trade. Okay, so let's move in right here. So as the stock moves up and we're looking at the volume that we have in this region, it's pretty average. So there's really nothing that you could really decipher from this area that would give you an answer on why to jump into a trade in either direction. We start to get some indications of that right around this region right here, and I'm going to explain to you why. So at the open, the price moves down, comes back up, comes back down, and we hit this same area again, right? Now the volume here is pretty standard. It's not too high, and we do have a green candle, right? So On green candles, we usually don't really have too many. When we hit a bottom of a range on the green candles, there won't be too many limit buys. When I'm talking about limit buys, I'm talking about buy orders that were set to just execute at a specific price, but they don't really move the market. And these type of buy orders are always executed on the left side of the bid column, right? So they don't move the market, but we would probably see a larger amount of volume here on this candle if there was some limit buy orders being executed here. We could probably see that there were some limit buy orders executed here by the a little bit higher volume here, but not enough um, with these upper wicks to indicate that there are a lot of buyers in this range. So this would be our first indication of some volume, but I don't really suspect anything here. And moving on to the following candle, we have an even lower amount of volume. So there's not really any positions being accumulated or distributed in this range. And as we move forward throughout the day, we have this super long wick candle here with a pretty average amount of volume. And if we move on to the next candle, this is where we get our first big spike of the day. So we want to take a very good look at this candle, right? So the spread on this candle it's pretty narrow with a high volume. So we can see that there was quite a bit of transactions that happened here and quite a bit of transactions that happened here. Now this is a green candle with some buying pressure, right? But with the amount of buying pressure that we have here, the spread of this candle is about the same as this candle. So if we have the same spread between these two candles and a higher amount of volume on this candle, the price should have risen quite a bit more. But because it didn't rise with almost double the amount of volume, this is telling us that there is some supply present in the market, right? So the candle is green, and as it moves up, there are several passive sellers in this range, right? So this is an indication of supply. There is supply in the market here. We have higher volume, same spread as we previously had in comparison, and yet the price didn't move up. So normally with this kind of spread and this typical green candle, you're not going to have any limit buy orders coming in. It's going to be more of passive sellers coming in because big banks and institutions, they like to sell on the way up and they like to buy on the way down. And that's just how they like to do it. That's how they roll. So as the price moves up, we can see that there is some supply here. So we've hit this range several times. 1, 2, 3, 4, 5. Now we're looking at this, and this is our first indication that things are not really going too well for the upside, because if there's too much supply present in the market, the price doesn't want to move up. It's going to head down because there is too much supply. Now on the following candle, we have an even higher amount of volume, right? So on red candles like this, we will see passive sellers as well as market sellers. So with the large wick at the top of the candle, and let me just start by saying on this candle, the reason that I don't believe that this higher volume would indicate any extra buying pressure, as in like limit buys or things like this, is because the price has already risen from this area, and usually the limit buy orders will be executed at the bottom of a range before the price moves up, or it be executed on the way down incrementally. So my guesstimate here is that there are no limit buy orders in this range, but the higher volume would indicate that there are a lot of passive sellers in this range up here. I'm going to just draw a little box so that we can see that. So we've got a lot of passive sellers in this range, which would indicate that there is a high amount of supply up here. And the market makers, the people running the show, they're not going to want to push the price up, because if they push the price up, there's going to be tons of people trying to sell at this price. Okay? So we move on, and then we have a candle with a really low amount of volume. So this next candle would kind of make you kind of second guess and say, oh, well, with the low amount of volume that we have here, maybe there isn't so much supply overhead that we want to push the price down, right? That's the theory. We can't see a major amount of supply here, so maybe the price can continue upwards. And then immediately following this candle on a 5-minute chart, we get a huge spike in volume, possibly one of the biggest spikes of the day. And it's right in that range. And look what happens. We get a really narrow spread compared to these two candles, and yet the volume is much higher, which is indicating that there is still a massive amount of supply. And what we can also formulate from this is, if we put a little line here at the top of the chart, at the high of this range, look what happened. We tested a new high here. And as we tested the new high, we had a massive increase in volume, which indicates that this probably right here was a massive amount of passive sellers who jumped in, and they had their limit sell orders ready to go. So when that price touched that area, it immediately triggered all of those sell orders and pushed, and it wouldn't really push the price down, but the price was brought back down because there's just too many sellers. And immediately following that, the price just dropped off a cliff here, right? So as the price drops off a cliff and we start to head down, if they were going to be buying the market back up, we would start to see a little bit of an increase in volume here, and possibly a long wick underneath one of these candles that would head into the low region, which would kind of tell you that there's some sort of accumulation here. Now, there's other factors to this kind of accumulation that would tell you which way the trade might be going, but this is some serious manipulation here. This is not indicative of. You could have caught this trade on the way down, but on the way down, you'd have to sell somewhere in here, possibly on this candle, because there's just nothing to tell you that this is going to keep heading down or it's going to start heading up, right? Let's keep going. So we hit this range and we get several spikes in volume here. Boom, 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 boom. Now, this candle here, we've got a massive wick above the candle, which would only indicate that maybe there's just a reshuffling of the stock, right? The buyers are switching to sellers, sellers switching to buyers, right? So we get a reshuffle here. Now, with this high volume and on a green candle, normally you'd see this type of volume at the top of a range, which would indicate a lot of passive selling pressure. Now, at this being at the bottom of the range, with this amount of volume, there might have been some accumulation around this zone, but there just isn't, for one simple reason, because market makers don't like to let stocks accumulate for too long in the same range. So if there was an accumulation here, you would see the price start to move up pretty much immediately following this, right? So they wouldn't let it accumulate here, accumulate here, accumulate here, accumulate here, accumulate here, and then move up. With this spike in volume, it's just a slight reshuffle. So this would be a sign to get out of this trade pretty quick. Now, as we continue, we see that the price does move up from here. Now, what indication would we have of this? Uh, Probably somewhere in this range, there was some limit buying pressure. It usually happens on red candles, so probably the majority of this volume happened somewhere down here on this candle, and it pushed the price up. And as the price moves up, we can see that there is still some supply present in the market because it did take quite a bit of volume to push the price up. So the supply is still present, which we saw over here. And this is a range that we will be looking at moving forward. So we move up and then we head back right back down. Some hidden selling pressure in this range, and we kind of ping pong back and forth, right? This is, as I said, this isn't really a great trading day uh, because of the fact that it's just there's just there's there's too many wicks. There's not enough clear signals happening here. So as the price moves down and up and down and up, look what happens in this range. We come down. I guess you could consider this a shakeout right here. And then as the price moves up into that range where we saw previous heavy amounts of supply, we get a massive spike in volume. So this massive spike in volume, usually when you see this, there would be a follow through, because if someone's going to buy so much of a particular stock, they're going to want to follow through so that they can keep those profits, right? But this massive amount of volume, when you compare it to the previous candle, you've got a pretty even spread here on these two candles. So there is tons of passive selling pressure in this candle. There's tons of people who are waiting to get out of a trade, and they were waiting for the price to head a little bit higher so they could get out, and they did. They got out right here. And then on the very following candle, the volume just dropped off. So this was kind of like a bull trap. So they pushed the price up through this range. And then these next three candles here, it's just to entice buyers. This is just to get buyers into the market. So anyone who got into here would be losing on their trade pretty shortly afterwards. So the price just goes sideways a bit, traps a few here, traps a few here. And then we hit here on this candle and we get a massive spike in volume, right? Now, what do? When we see this massive spike in volume right here in this range? We've already know that there's a lot of supply present. And generally on red candles, you will see limit selling pressure in high amounts and limit buying pressure in high amounts. So there's two options that we have here. They've pushed it up through this new range. Now there could be a massive amount of accumulation happening right here. And after that massive amount of accumulation, generally you'll see the price just keep heading up. And if it keeps heading up, it might come back to retest that range before moving up. Or if it's a large enough amount of passive buyers that have entered the market, a new buyer has entered the market, they'll just keep pushing the price up, as I said before. So we continue, and then we get a really low amount of volume here. We went from 833,000 to 38,000. So this candle right here is just telling us that there's no demand in the market. There's no interest in buying the stock at this higher price. So anyone who bought here would just be trapped out shortly afterwards. So they pinged the price right back down into this range. So we retest the bottom. Now here's what's interesting. As we hit the range at the bottom, there's no volume. It's nothing. It's 5,982 in volume here. So we've got no volume as we touch the bottom of this range, right? and yet the price reverses immediately afterwards. So if we go back, this could be an indication that there was some accumulation at the bottom of this range in here. So they bring it back down. Now, if you look closely, you can remember what I said. They don't like to let too much accumulation happen in a specific zone. You know, if the price is going to move up, there's going to be some accumulation at a specific level, but they won't want to keep it at that level for too long, because if there's too much accumulation at that level, the price will just drop off. So if we continue here, we're moving up, and then we get some really weird price action here, and we get two big spikes in volume. Now we get a pretty massive spike in volume here on a red candle, which could indicate that there's a lot of supply still in this range that we previously saw before. There might still be some selling pressure here, and then immediately afterwards we get that drop off. And then as we continue for the rest of the day, we look at this range right here, and this box that I have marked out here is where the first accumulation happened. For some reason on Webull the volume doesn't appear as nice as I'd like it, but let's continue anyways. So now right above that range we get a massive spike in volume here, which would indicate there, and this massive spike in volume is beneath the candle. Most of it's beneath the candle just because of the fact that we have a pretty large wick. So it's like 80% of this candle is wick, and this to me tells me that there's a lot of limit buys coming in. And the limit buys come in because somebody's accumulating a position, and before you know it, they'll be hitting the ask. They'll be buying the market to push the price up on their position so that they can sell it off. And then we get several little green candles here that just move the price pretty much nowhere, which really doesn't indicate anything. And then we get this doji here, and this doji, it's pretty even on both sides. So this tells me that there is even more buying pressure, a little bit more buying pressure here, limit buys. And the reason I say that is because it's pretty much so low in the range that nobody's really selling here. No one's selling here. They've already sold off a lot of their position at the top of this range and at the top of this range here. So it's already sold off. Now we're at the bottom of this like kind of support zone, and the first accumulation happened here. And as we're moving forward and we look, we get a little bit of something here, and then look what happens. As I said before, we get another move up. So right here we have three different levels, and I like to look at these kind of like little stacked levels where there's accumulation, because I feel like most of the time when there's an accumulation at one level, if they accumulate at the same level, the price drops off. But if the accumulation happens steadily above the first accumulation, the price will continue upwards. So one accumulation, two accumulations, and then we get our third one here, which you can see in the volume here. So on this red candle, it's not really market sell orders. It's a high amount of volume. These are limit buying orders, right? And then the price does move down, but with the low volume, it's a good sign, because it's, as I said before, at least for my idea and the way that I like to trade, I don't like to see too much accumulation at the same level. I like to see the accumulation kind of happen at like slightly higher levels before moving up. And we had 1, 2, 3. The price drops down. It tests this. I guess you could say this would be considered a test. So what it's doing is testing to see if there's any more buyers at this level before it heads up. and we've got a pretty low amount of volume. So then the price moves up, and as the price moves up, we get another wick here with a massive spike in volume. So in this area, we can safely say that there was a large amount of passive buyers that were trying to get their orders filled before the price moved upwards. And a lot of a lot of people made money here when the price moved up and they got filled in this region. So if you missed the trade here, the next group got in here, they moved the price up, and then we hit a range at the top here. So as we hit the range at the top, we see that there's some supply present here. So supply has entered the market at this range. Um, so we've got a new range of supply here, right there. And then we get a massive spike in volume, which is telling us that there's even more supply. So tons of people trying to sell here, trying to collect some profits, maybe from today, maybe from a month ago. Anyways, there is some passive selling pressure here. Then we continue a little bit higher. We still have massive spikes in volume, so there's continued selling pressure in this range. No volume within these candles here, really. No one is accumulating at this range. And then as it starts to drop off towards the end of the day, what we can see here clearly for the last candle of the day is that everyone was selling off before the weekend. So this last bit here was kind of like last chance, last dance. This is as high as you're going to get. And a lot of supply was already or waiting to be sold off at this last minute. Now, I wouldn't really base this last candle on any decision to carry over for the weekend. I don't like to carry over my trades from day to day. But what you can see here clearly, let me just plug in my computer before it dies. What you can see here on this candle is that with this high amount of volume and at this range, is that it's safe to say that there's a lot of people here that were getting out before the weekend. So there was quite a bit of passive sell orders waiting to be filled or were put in at the last minute so they could get out of this trade. And at the same time, there could have been a lot of passive buyers that have stepped in here, right? It's not really a huge move, and if we look at it in comparison to some other moves, the volume is it's pretty high for the spread. We did have some lower volume moves like here and here with even higher spreads. Okay, so this volume here, we could have some accumulation here, but more than likely I would say that most of this is supply, just because we're sitting at the top of the range for the day. So that's my analysis for November 24th. Supply. So my best guesstimate is Monday morning we're probably going to open up somewhere in this range and maybe sell off. It's 50-50. As I said, I don't like to carry over my trades just because of this simple fact that at the start of the day, we always get this like really large imbalanced candle with tons of buyers, tons of sellers. You know, the numbers are just pretty much wacky. If you look at the order flow, you can't really tell if this is going to head up or it's going to head down. Most of the time, the delta can be completely red and then the candle just, it just keeps heading up or down. There's really no way to tell. So best to always wait for a position to open up. And that's my first trading video. I hope it was enjoyable. This is the SPY ETF, SPY 500. I'm going to be making some more videos. I'm going to be explaining some more things on live trading videos, and I hope that I actually have some followers and some people who actually want to hear what I have to say. And thank you very much. God bless you. Hope you have a nice day. Bye.